Let's start up with what you heard from the Vice President just now. And what was his message in your view?
Well, the most important thing that I heard is really China, US, we have a lot of differences. We're going to have a lot of problems. But just talking about the problems won't solve the problems. We actually need to think about whether there are ways to actually resolve those problems. There's no way for us to disengage. Might as well just try harder and try to fix the problems, whatever they are.
Absolutely, and the problems are, of course, there for everybody to see. It's a trade war in all but name now. The thing being, how does that impact your business at the moment?
Well, obviously that create a tremendous overhang on the broader sentiment in the market, so that does not help. But beyond that, I have not really seen any real substantive and substantial structure reasons. People actually are still coming, in big groups, and the listing pipeline is still very long. Deals are still getting done, maybe not at a valuation of people's choices. And also the secondary market performances may not have been as strong as a lot of people would like them to be, but they just keep coming because all those companies have big business plans to fund, big strategic expansions and to pursue. They don't seem to be deterred or, and affected by this broader sentiment as much as we're afraid.
And, we've seen Hang Seng, it's probably been one of the worst performers out there year to date, and they still come. Why do you think, though, Hong Kong has been sort of hit by a double whammy and has done so badly? What's your view on this?
Well, Hong Kong is an open market. We're very exposed to what's going on inside China. We're very exposed to whatever is outside China. So usually we're either double whammy or double happy, or we're split. And that's the nature of our market. When China is strong, we tend to get strong. U.S. strong, we tend to get strong, and vice versa. And this is one of the few times where both are struggling in their own ways, and we are right in the middle of it. But the real most important competitive strength of Hong Kong is that we are always open for business, no matter what. And there are always going to be people who wanted to do deals in big, hype, big, boot market. And there are people who still want to get the deal done whether or not the market is there.
Well, you say it's a big IPO pipeline. Tell us a little bit about the next 12 months, given market sentiment and the relations between Washington and Beijing.
Well, this year is so difficult, and yet we have had we had a record year, and it looks like we're going to end the year #1 globally, and this is really despite the market. So I actually think next year. I don't necessarily see things will get worse next year. I think the pipeline is very strong, and people now finally get very comfortable with the new regime, and there are a lot of early teething issues that are being sorted out. So I think I'm very, very happy next year.
Tell me about the dual class shares. How many of those do you expect to list in the next 6 months, very quickly?
I don't know about next 6 months. Usually the fall is the big months, but I think the pipeline, we have dozens in the pipeline, and quite a few will get done the first half, and then we have a short summer. But usually the deal is done in September, October, November.
Okay, pre-revenue biotech firms. I'm going to put you on the spot. How many of those are going to list?
We already see quite a few, half a dozen, very healthy ones. The last one was doing extremely well. And I will see at least...
These are pre-revenue ones we're talking about?
Yes, this is the biotech companies. And I'd be very surprised if we don't see at least Charles, a dozen next year.
One thing that I always wonder about, is there the liquidity to support all these companies coming to market?
Yeah, obviously, the liquidity is always there. The issue is whether or not people like the prices, where they trade. Well, anytime the issuer doesn't like the prices, there are enough investors who think they're finally reasonably priced. And some deals were done very aggressively in the valuation, and then they tend to trade, poorly in the secondary market. And some others are pricing much more realistically, and you see them very strongly performing in the market.
But what about foreign IPOs? That was one of the big pushes, and we haven't seen many. We haven't seen the likes of more Pradas of this world, Samsonite, or L'Occitane.
I think foreign primary issues in Hong Kong, listing, not secondary listing. I don't think secondary listing really works. Primary listings will not happen in big, times until primary connect is able to be implemented. So I don't really see that.
Well, tell me about Primary Connect.
Well, Primary Connect, Stock Connect today essentially is the stock has to be listed in Hong Kong, traded in Hong Kong first, and then the Chinese will be able to buy them in the secondary market. Primary Connect essentially envisions that one day a company will be listing here and then place a block of shares directly at the time of the IPO, at the price of the IPO, to the domestic investors, so that they can trade right after the IPO as if they bought it already. So that's really Primary Connect, and that will be the future driver.
Well, absolutely, and Stock Connect, after some teething problems, of course, at the beginning, but record Northbound, what does that tell us? Does it tell us that maybe we're seeing a bottom there?
No, I think this is really the beginning, because MSCI just included them and FTSE just announced, and it hasn't really been effective. And MSCI is going through consulting the market whether they can get the factor substantially higher. It looks like it could happen. If it does, there will be even more passive funds that need to flow into Connect into China. So I actually think we're still seeing the beginning of that trend.
Tell me about technology and the Hong Kong Exchange. What about your plans there?
Well, there are three big sort of a plan. One is, we set up an innovation lab, essentially helping us to sort out a lot of inefficient processes. That's a pretty, ongoing, intensive work. We identified over 100 processes we wanted to really change, and so we're buying little technologies here and there, trying to fix them.
Exactly. That's what I'll get to. What's your acquisition pipeline like? Are you having these bolt-on acquisitions? Tell us about some of the synergies and where you have holes or lacunas in your business.
I think we ultimately probably will, really, make sure that we are a fixed income and currency exchange, but that's a little bit longer down the road. But in the midterm and short term, we probably will buy a technology company of some sort, of some size, to really supplement our technology capability. Because whether or not we're going to adopt blockchain, whether or not we're going to develop a good data strategy.
Isn't blockchain a little bit clunky, though, for stocks?
No, we actually are now, we just announced last week that with digital assets, we will jointly develop Northbound post-trade blockchain settlement processes. Because in that particular segment, blockchain can solve unique problems that industry faces.
So would the acquisition involve a company dealing with that particular type of technology?
It will be companies that will help us implement, should we ultimately make a decision that we will use that technology for Northbound Connect first. And if it works, we could potentially expand it into other businesses.
How's the London Metal Exchange working out for you?
Yeah, it's finally turning, the corner.
You said it did turn the corner to me about a year ago.
No, we were turning the corner, and now we have turned. Now we have turned the corner, and I think volume is really coming back, and our revenue is up, and our revenue mix is a lot more optimized, rebalancing, reflecting member and exchange realignment of interest. So it's really doing very well now. Finally, so I'm very, very happy with it. We're developing a stronger and more resilient relationship with our regulators, and MiFID II surveillance and everything else. Finally, I don't need to worry too much about LME.